Hello, and thank you for exploring Lakehead International's videos. My name is Jordan, and I am the International New and Social Media Officer. I'm also the host of the Lakehead International Live series, a fun and informative way for you to connect with current international students, professors, and ask questions about admissions and everything Lakehead. You are about to watch a recording from one of our previous live sessions. If any questions arise throughout the video, please do not hesitate to comment below. If you would like to check out some of our upcoming live sessions, please head over to our website at lakeheadu.ca/international-live. Let's begin. Hello and welcome to another Lakehead International Live. My name is Jordan. I'll be your host today. I'm joined by a very special guest, Dr. Herman van Berg, and we also have a few international enrollment Lakehead University team members behind the scenes today helping us run today's session. I'm really excited to be kicking off our international lecture showcase series with Dr. van Berg, and of course, the topic of crypto assets. So we have quite a few series or showcases in this series. And so today I'm very excited. Also being a business graduate, I think that this topic is really intriguing for students in the business world, but of course, students across the world and in any subject matter essentially have interest in crypto assets. So I'm certainly excited to be here today. Thank you again for joining us, to the audience and to the many folks that supported today's session. Before we dive into actually the lecture itself, we'll begin with introductions and we'll chat about the agenda and plenty more. So I'll introduce myself and then we'll pass it over to Herman. So for those of you who don't know me or haven't joined a live event before, my name is Jordan Ball. I am the International New and Social Media Officer. I help run our live events, our digital experiences, social media channels, as well as the Lakehead University Global Ambassador Program. And so hopefully one day when you join our great institution, you'll be able to participate in the Global Ambassador Program with me as well. So I'll pass it over to Herman to introduce himself and then we'll get started.
Good morning, everyone around the world. I'm very honored to be the first person here to this international lecture showcase. As you can probably tell by my name, I do have an international background. I'm a Dutch citizen as well as a Canadian citizen. And I'm a professor in the Faculty of Business Administration, and specifically in the areas of finance, which is very exciting. And I hope if you come to Lakehead, you'll find it very exciting as well.
Awesome. Well, thank you again for joining us, Herman. So for those of you who don't know, of course, we are working remotely right now. So I'm actually based out of my home in Thunder Bay, and Herman's based out of the Orillia-Simcoe County area right now. And we both are attached to those specified campuses. So I work on the Thunder Bay campus typically, and Herman is typically on the Orillia campus. And so we have plenty of wealth of knowledge here, both about crypto assets, more so for Herman, that's for sure. But when it comes to Lakehead and our Orillia campus and Thunder Bay campus, we're happy to answer questions today. So with that being said, I'll chat about sort of our agenda. First, I'll kick things off before we actually pass it over to Herman. I'll chat about our upcoming events, some of the exciting opportunities our future students have to join and participate in. And then, of course, we will actually do the crypto assets, why all the interest lecture. And Herman will lead that. I will simply moderate and help feed him questions from the audience. And then we actually do have a dedicated question and answer period. So I encourage throughout today's session to ask Herman questions, ask myself questions. As I mentioned, we also have a dedicated staff team behind the scenes helping answer questions. But at the very end, we will certainly take a decent amount of time to answer plenty of live questions. And on that note, I'll chat about some of those upcoming events. So in the Academics Explored series, as a part of the International Lecture Showcase series, we will also be doing next week a COVID and climate change webinar with Dr. Robert Stewart, and that is on Wednesday, May 12th at 9 a.m. Following that, the following two lecture showcases are with Dr. Robert Mawhinney and Dr. Daniel Hanna. The first one with Dr. Mawhinney is direct-to-consumer genetic testing, so learning all about those ancestry DNA testings and how to obtain the most out of your results. And then our last series, or our last event, is the Entering the Frame, where Dr. Hanna will bring us into the cinematic journey of a director's choice in filmography, photography, videography, and drawing the audience into that very first film. With that being said, if you are interested in any one of those sessions, I encourage you to head over to lakeheadu.ca/international-live to register right now. However, I'll save that for the end, hopefully. So you don't do that and you don't miss out on other upcoming events or the lecture itself. Hopefully you do that towards the end of today's session. As a part of the Lakehead Explore series, we have a few exciting upcoming events as well. Next week, you actually have the opportunity to meet your future advisors. And so we do have dedicated international student advisors on the Thunder Bay and Aurelia campus. They are amazing advisors. I work quite closely with them on a regular basis. So I'm really excited to introduce them to you if you haven't already met them. That will be Monday, May 10th at 9 a.m. Following that, we have the My Journey to Lakehead student panel. And so hearing about the student experience directly from current students or recent graduates is really important, we know. And so I'm really excited to host that on Monday, May 17th. And then one of the last events in the Lakehead Explored series, at least, is going to be hosted on Tuesday, May 25th, and it's with residence and dining. So for those high school graduates or high school applicants, if you are looking for on-campus residence or accommodations, I encourage you to join that session because it's strategically planned to be 1 week out from the application deadline if you are looking for that guaranteed on-campus residence. Again, you can register online now at lakeheadu.ca/international-live. And last but not least, we are very excited to introduce the International Applicant and Family Receptions. So these webinars and these events have been designed exclusively for Lakehead applicants and their families. And this series will introduce you and guide you to prepare for your studies here at Lakehead University. We have plenty of sessions in the next 30 days, roughly. And so our first run, we'll kick it off is Tuesday, May 11th at 8 a.m. All of these times are in Eastern Daylight Time, so in our Thunder Bay area. So if you are looking to see what time it looks like for you, I would encourage you to use a time zone converter, and you are specifically looking for the Thunder Bay time zone or Eastern Daylight Times. So with that being said, you can also register for those events at lakeheadu.ca/international-live. Things to remember before we get started. If you like what you see, don't worry. We are recording today's session and it will live on demand. So you can watch it again, or if you have to head out early, no worries. You can finish it up later on our YouTube channel. If you do have questions and you're joining us live on on Zoom, you can use the Q&A function to submit those questions. Otherwise, my last note here is just to stay connected with us and follow us on social media. Our username is @Lakehead International, both on Instagram and Facebook. I'm posting regularly on there about upcoming events like today, but also important announcements out of Lakehead University's upper administration, as well as opportunities for our students to get involved. And so on that note, I will pass it over to Herman to kick things off with his lecture.
Thank you, Jordan. Can everyone see the screen okay?
Looks good on my end.
Okay, so my topic today is crypto assets, why all the interest? And I'm sure many people have various ideas why, what's generating all the interest. I'd like to dig a little deeper and to explore what's underneath basically this crypto assets, and if you're interested, how you could potentially invest in crypto assets. So first of all, being a finance prof, you know, if you ever buy anything financial, you'll see disclaimers. And the first one here is a disclaimer that what I'm going to give you is not investment advice. So neither I nor the university are responsible for any investment decisions you make based on what you see or hear today. And this is my presentation. It's not something that Lakehead University is necessarily endorsing. So the opinions are strictly mine. So what underlies crypto assets? Well, it's a relatively new technology called distributed ledger technology. And the three words basically describe it fairly well. A ledger is basically a database, and blockchain is a type of distributed ledger technology. It is, instead of the database being centralized, for example, a bank record of your balance that you have in an account, the information is distributed on a number of computers called nodes, and blockchain is one type of distributed ledger. So in other words, the information is held by, the same information is held by many, many servers, computer servers, or nodes. So hence the word distributed. The strength of the distributed ledger technology is that there's a consensus. Every one of those computers, every one of those nodes agrees on what the information is. So that basically, some people refer to that as a trustless system. In other words, you don't have to trust, for example, that your bank has the correct records, because the correct records are distributed widely. It's also shared. I'll show you an example in the next slide. Basically, what that means is that anybody with access to the internet can find out what the balance is in any account. So it's transparent as well. And of course, it has to be synchronized. All of these computers have to agree as to what is the valid database. Now, two important points here that in addition to being decentralized, what that means is that there's no central authority. In other words, there's no bank, for example, that sits between you sending funds to another person. There's no intermediaries. And also, another important point is that blockchains are immutable. That means you cannot change them. Once they're created, they're forever there. And that has advantages and disadvantages. One advantage is that everybody can audit, the chain of events. On the downside, though, it means you can't reverse any transaction. So in other words, let's say you made a purchase on your Visa card or another credit card, and you want to dispute that that transaction. You can do that with your financial institution. However, if you do it on the blockchain, there's no chance for reversal. So this next slide is from Etherscan.io, and it has an address here that's on the Ethereum blockchain. And you can see it's a very long one, okay? And all of the nodes, all of the computer servers on the Ethereum blockchain will have this same address. And oops. And what they will show is that in that address are 14 tokens, okay? And they have a total value of $10.61, which is, I'll show you later what constitutes this $10.61. These are basically 14 tokens, and this is one of my addresses on the Ethereum blockchain. Most of these 14 are worth 0. In fact, most of this is 1. Okay, some crypto terms. This is kind of important because there are a lot of terms and they are fluid, they're unsettled, they are changing constantly, and sometimes, arguably they're misused. So cryptography is where the term crypto asset originates from, and essentially it is a method for protecting and securing information and communications through encryption. Okay, so it has many uses. To a virtual private network would, for example, require cryptography. Financial institutions use cryptography. If you do online banking, it will be secured through cryptography. To take it a step further, crypto assets are digital assets. Okay, so they don't exist in a tangible form. Even though you might see pictures, depicting a Bitcoin or something of that nature, in reality, it is basically information that's on a distributed ledger. Okay, and blockchain is one example of that. There's others like Hyperledger and so on. So all of these assets are basically digital assets. They exist only on the internet. If the internet did not exist, these crypto assets would not exist. Cryptocurrencies are a specific type of crypto asset, and the term currency suggests that it's a medium of exchange, something that you can use to buy and sell things with. Okay, a hodler is anyone who holds onto their crypto assets instead of trading them, and as you can see, that's basically a misspelling of holder, and it's a quirky misspelling, and the name stuck. Okay, so there's there are more of those things in the crypto sphere. Okay, these are some terms you may be familiar with. First one is Bitcoin. It was the first decentralized cryptocurrency. It started around 2008, and it is currently the most popular. It's about it's almost 50% of the total value of all cryptocurrencies in existence today. It's about 46%. Ethereum is the second decentralized crypto asset. It was invented by a Russian Canadian, a student at University of Waterloo. Okay, and I don't think he completed his computer science degree, but started with Ethereum to basically improve on the aspects of Bitcoin that were missing. Things like, for example, the idea of a smart contract. Gas, okay, if you put gas in your automobile or petrol in your automobile, it's basically to keep the thing running. And gas is a small fraction of Ether, which is basically the fuel or the currency that runs the Ethereum blockchain. And it's basically what you pay if you're doing a transaction on the Ethereum blockchain to cover the computing costs. Altcoins are any type of crypto asset other than Bitcoin, and there are almost 10,000 altogether. Tokens, it's a type of crypto asset. Typically, they sit on the Ethereum blockchain, and they can be distinguished as either security tokens or utility tokens. And security tokens are ones that represent an underlying asset. They are subject to regulation. So national regulators, security regulators will take an interest in those. The other type that try to circumvent security regulators are called utility tokens. They are crypto assets that perform some type of function. DeFi, a very apt term. It stands for decentralized finance, and essentially it's the idea that you can have a borderless alternative to a centralized financial system. Okay, so it's in defiance of the current centralized system. So let's start off with some polls. 3 questions.
For sure.
Jordan.
But before we do that, while I launch the polls, actually, I have a few questions that are related to what we just covered. The first one I think is very interesting, and maybe a common misconception. It says, is cryptocurrency illegal?
Very good question. It depends on where you live. Generally speaking, cryptocurrency is not illegal. It is not, however, legal tender. And we'll talk about legal tender in a second. A legal tender means, for example, if you're in Canada, that if you choose to pay your bills in Canadian dollars, then the recipient is not allowed to refuse those Canadian dollars. Okay, if you want to pay in Bitcoin or Ethereum, then the vendor does not necessarily have to accept that. Okay, so it's not legal tender. If you want to pay your taxes, generally speaking, you have to pay them in Canada in Canadian dollars, in the US in US dollars. Some places are starting to accept, some small municipalities are starting to accept things like Bitcoin to pay your property taxes, for example. But holding cryptocurrency is not in itself illegal in most of the world. That is with the caveat that some places are, some countries are trying to make it illegal to hold it. So,
fair enough. Good to know. The other question we received is, how are those terms that you just talked about often misused? Okay,
there's an upcoming example of this term called ICO, initial coin offering. When you think of a coin, you think of something physical. There's no physicality to cryptocurrencies. Sometimes, a token will be referred to as a coin or as a currency. Currency suggests that something that you can, buy and sell goods and services with. In reality, most purchases of goods and services are still done with government-regulated currencies. So even the term cryptocurrency is, in a sense, a misnomer. But these things are evolving, and essentially, there will be some agreement as to what the correct terms is for each of these items.
Fair enough. Awesome. Thank you so much for answering those. So like you mentioned, Herman, we're going to kick things off with a poll. So this will be the first poll of today's session. So to our audience members, I will launch the very first poll with the question, have you ever bought Bitcoin? It's a simple yes or no. We're just looking for some general feedback. As it flows in, we do have a few people on today's session that have purchased it. Looks like it's definitely swinging more to the no, though. Right now, we're about 85% of you at a no. I'll give you about 10, 15 more seconds to give us your responses, and I'll share the results. Awesome. So I'm going to go ahead and share those results. We ended up having 9 yeses and 53 no's, which I would anticipate was probably somewhere around what you were expecting. Of course, people know the topic is about crypto assets. If they had that passion already, they're going to join. But it's a big topic right now around the world, and many people would love to know more. So on that note, I will also kick off the second poll, which is for Ether. And so I'm also curious to know if students have ever purchased Ether. And so that poll should be up and live now for our audience to participate in. Looks like we have pretty similar numbers coming through. This one might be slightly more popular than Bitcoin, actually. I'm surprised. I'll give everyone about 5 more seconds to answer that one, and then I'll share those results, of course, too. Awesome, here we go. So we do have 11 folks who have purchased Ether before and 58 who have not. So again, we're leaning on the side of no for the vaster audience, but that's not to say that we're not going to cover it in depth today. And then our final question today, our third question, is about altcoins. So I'll launch that for everyone to participate in. Have you ever purchased altcoin before? With such a large variety of altcoin available, so those crypto assets other than Bitcoin and Ether, I'm picturing that today we're going to get results of even more folks that are on the yes side. And that's looks like that one is rolling in. So I'll wrap that poll up and share those final results. So we did have 18 folks that have purchased a different type of coin, and then 47 no, but that's actually our most popular poll today. So thank you for that, audience. We will have a few more poll opportunities and engagement opportunities coming through. I know that we have more questions that have popped up, but I'll pass back to Herman to continue on with the slide, and then we will work in more questions, not to worry.
Yeah, especially the questions about buying crypto assets. I'm going to give you lots of opportunities and different methods. You may recognize at the bottom here that this is a Binance coin, a Doggy coin, and a Ripple coin. I would be, if we had more time and being a professor, I'm interested in research. I would love to know what type of altcoins they were. But in the interest of time and moving on, I won't have that opportunity today, unfortunately. So some more crypto terms. If you're familiar with these, I apologize, but if you're not familiar with them, these are kind of important. A fork is basically when there's typically a disagreement between people who have invested in these crypto assets. So this disagreement results in a fork or a breakaway in the underlying computer code, and then new coins are created. So if we have, for example, Bitcoin and Bitcoin Cash, Ethereum and Ethereum Classic, and they happen for various reasons. With the Ethereum and Ethereum Classic, for example, there was a large hack, and I think about $50 million worth of Ethereum was stolen. And so the main branch, the Ethereum branch, decided to reverse that, so that 50 million was returned. But Ethereum Classic decided that that was not the way to go, that they should have stuck with the original code. A whale is someone or some organization that essentially it's an account that holds a large amount of any crypto asset, typically greater than 1%. and has the ability to move the market. In other words, to affect the price of that crypto asset. Proof of work and proof of stake. Okay, Bitcoin is a proof of work type of crypto asset, which means that the coins have to be mined, which is very energy intensive. There's lots of information available on the internet about what mining involves. Proof of stake is where the ownership, the members who actually have a stake in the crypto asset, run the system. So it's not as energy intensive. A 51% attack is, as I said before, this is based on a distributed ledger. If some organization or group of people are able to control 51% of all of the computers or all of the nodes on the blockchain, then they could effectively rewrite the blockchain and basically abscond with other people's investments. This is something that is relatively rare, and the idea is that if the nodes are widely enough spread around the world, around the internet, then that's very unlikely to happen, that anyone is able to control 51% of the computers. Okay, another thing that's kind of brewing is this battle between permissioned and permissionless blockchains. So Bitcoin, for example, and Ethereum or Ether are permissionless blockchains. So anybody can participate in those blockchains. Anybody can buy Bitcoin, buy and sell it. The same with Ether. On the other hand, the Ripple, the XRP currency is, I believe, managed by 16 nodes. So it's private. You have to have permission. You have to be one of those 16 basically to run that blockchain. And why this is an issue is because the whole distributed ledger technology started off with Bitcoin, but national entities like central banks, they have a responsibility to manage currencies, and as a result, they and private banks, they also have an interest in the financial running of a country, and so they have an interest in permissionless blockchains. In other words, you have to be part of a consortium of banks, for example, to have a say in how the blockchain is run. So I have another poll, so I'll pass this back to Jordan. How do you think the future of distributed ledger technologies will unfold? Do you think it will become more permissioned or permissionless, or is it too early to tell?
Awesome. So that poll is live now for audience members to vote. Of course, it's to select one option of the three available. So we'll give them some time to do that. In the meantime, while we let poll results roll in, Herman, I have a really great question on the Q&A here. It refers just back to the terms before this slide, and it says, as you said, Whale is capable of moving the market. What market are you referring to?
Okay, I'm referring to the market for any particular crypto asset. So if anyone owns more than, say, 1% of the Ether, they could, in effect, sell a lot of Ether and force the price down, or they could, if they have the assets, also buy a lot of Ether and force the price up. So in other words, market manipulation, which is something that regulators are very, very concerned about. And one of the things that's not allowed in a typical regulated market, for example, like a stock market, there are checks and balances. These do not exist in the crypto asset space.
Awesome. Thank you for that. So it looks like our poll has come to a slow end there of results. So I'm sharing those now with everyone. We do have one winner, but only by a small margin. So permissionless blockchains will dominate is what the prediction is. So we have 24 for option one, permissionless blockchains will dominate. We have 18 votes for permissioned blockchains will dominate, and 16 folks who said it is too early to tell. So very interesting results there. Herman, do you have any reflections or insights on that?
Yeah, there is some thought by researchers that suggest that they both could continue to coexist side by side. And then the question would be, how much of the blockchains will be permissionless versus permissioned? If you can think of permissionless blockchains, like one of the complaints about Bitcoin is that it can be used for criminal activity. Well, before Bitcoin came along, cash was used for criminal activity. Both of them are basically anonymous. And so to the extent that we still have cash, even though we have credit cards and online shopping, you know, there will probably always be a home for permissionless blockchains.
Fair enough. Awesome. So I'll stop sharing those results now. We still do have one more poll in today's webinar, so stay tuned for that. But I'll pass back to Herman to go through a few more slides, and then we'll also work in a few more questions throughout.
Okay. One of the things I'm going to talk a little bit more about later on is non-fungible tokens, or NFTs, and you may have seen these in the press lately. They're quite interesting. So I've got a slide here that talks a little bit about fungibility, but basically what it means is if something is fungible, if you have, say, a $100 bill, a bank note for $100, you can change that for 250s or 520s or 100 loonies, and you would still have the same value. Okay, so there's no loss of value in exchanging between the different sizes of currency. So in other words, they're mutually inexchangeable without loss of value. Non-fungibility means that you cannot exchange it readily without some change in value. So you could think in the real world something like a house. One house compared to another house, they're not totally identical. There's always going to be some differences. There could be a different location, different neighborhood, different type of construction. So that would be an example of a non-fungible asset. Now, non-fungible tokens are basically tokens that aren't fungible. So in other words, you can't really exchange them. And they're useful for collectibles, basically digital collectibles. So I will talk a little bit more about that a little later. And of course, just keep in, if you're interested in crypto assets, keep reading, because there are ever more evolving terms. This morning, I was reading about perpetual swaps being the latest type of innovation that's occurring in the distributed ledger technology. So this is the last sort of poll. Jordan?
For sure. So I just launched for the audience. This is a single choice, a yes or no. So the question, if the Bank of Canada issued a central bank digital currency, or CBDC for an acronym or short form, would you use it? So this is a curious one. I know, Herman, I don't want to get ahead of myself or ahead of you. I know there are countries around the world that are currently looking into or even launching their own digital currency. Do you have any thoughts about that? Do you have any timelines where you anticipate Canada might be able to do something similar?
I think it's in a couple of slides forward that the Bank of Canada has already engaged researchers at the University of Toronto to design a central bank digital currency, or a central bank digital loonie, as it's termed for the Canadian coin. There are other countries that are looking at it. One of the biggest concerns that central banks have is that if they launch a digital currency, in other words, one that's on a distributed ledger, that the monies would flow, the deposits from the banking systems, from all the banks, would flow into these digital assets, these digital central bank digital currencies, and the banks would not have the deposits that they rely on to do business. So that transition would have to be carefully managed. That is one of the big concerns right now.
For sure. So we do have the results in for this poll, and I'll share those with you. A vast majority of you agree, yes, that you would be interested in using a digital currency if it was ever introduced. So 43 said yes and 14 said no. So very interesting. I would love to pick the brains of everyone who might say no and what your concerns might be. But of course, like we said today, we have quite a bit to get through. So I'll pass back to Herman to continue on there.
Okay, thanks, Jordan. Okay, so part of this idea of a central bank digital currency involves legal tender. And as I mentioned before, if you want to pay your tax bill or purchase something from a supplier in Canada, then you'd have to pay basically Canadian currency or what's called legal tender. So it could consist of either banknotes that are issued by the Bank of Canada or coins like the loonie or toonie that are issued by the Royal Canadian Mint. And the Bank of Canada is considering issuing a central bank digital currency. They are taking steps just in case. However, at this point, they're not moving ahead with it. And just that, going back to the question we had before about are crypto assets illegal? They aren't, but they are also not legal tender. So in other words, if I am selling you something, I can demand Canadian currency. If I'm in Canada, I cannot demand, say, Bitcoin or Ethereum. I can ask for it, but legally, it's not legal tender. So some of the desirable features of a digital loonie would be, or one of the reasons the bank is considering it, is that to provide universal access to everyone. So right now, everybody in Canada has access to Canadian cash or possibly a bank account, although there are a very small proportion of people that are unbanked. So that's one of the desirable features that a digital loonie should have. The other reason the Bank of Canada is interested has to do with this idea of a permissioned blockchain. They want to be able to control monetary policy. So I don't know how many of you have studied economics, but typically as an economy grows, let's say at 5% per year, that means that the central bank should be creating new currency at the same rate of about 5% per year to keep prices stable. If currency expands faster than the economy, then we have inflation, and that is bad for business. Okay, and as I mentioned before, University of Toronto researchers are already designing Canada's first digital currency. And okay, I've got this poll again, but we've already done that, so we'll skip over it. Sorry about that. So the U.S. Central Bank is also doing the same. This is from Business Insider a few months ago. It's looking carefully at it. And basically, as I said before, there is this sort of battle between permissioned and permissionless. And I don't believe that central banks or any financial institutions are going to give up their role in the economy without a fight. Germany is working on building a bridge between blockchain and the euro. Okay, so they're building some type of bridge essentially between fiat currency or government currency, the euro in Europe, and crypto assets. So I'll leave it there for the focus on central banks and banking.
Before we move on, sorry to interrupt,
sure.
I do have one question from a student, which I think is definitely more of like an opinion-based, and I'd certainly be interested. It says, do CBDCs undermine decentralization of the crypto market, seeing as crypto is meant to generally be decentralized itself?
As I said before, I suspect, my personal opinion as well, is that they both will coexist. There will be a role to be played for permissionless and decentralized, and there will be a role for permissioned. There will always be, you can think of it as a club. There will always be a club of, say, large banks, large financial institutions, which will want to exercise some type of control. And central banks as well, for the benefit of society, will want to have some type of control over monetary policy. So I think both of them will coexist. But I don't think permissionless is going to go away simply because central banks are considering their own central bank digital currencies.
Fair enough. Awesome. So I'll pass back to you.
Okay. So this is basically, I'm going to be going into the investing side of it shortly here. So why all of the interest? Well, there's two aspects to this. First of all, it's the technology, and just as the internet allowed the business models that are used, for example, by Airbnb. Airbnb could not exist without the internet first having developed. Similarly, there's going to be some technologies, some business models that are going to flow out of distributed ledgers that could not exist without that technology first having, been developed. And it's very interesting to see, just to experience what those things are going to be going forward. The other interest is to, of course, make money, whatever form it takes. I have dollar signs there, but it could be Bitcoins or any type of holding of value. So now I'm going to switch to looking at investing basically in crypto assets. So the first thing to consider is risk. And risk is typically measured by volatility of returns. And if you look at Bitcoin as an example, it started out with zero value. These days it's worth between, say, 50 and 60,000 US dollars for one Bitcoin. And, for the last about 3 years, it's been in the doldrums, but then in 2018, it had a spike. And so the second point here is that it's impossible to predict or forecast what the actual returns are going to be. And returns would be, buying it low and selling it high, because it does not pay interest or dividends or any other type of return that you would typically get with a traditional type of asset. So my personal belief is that there's value in distributed ledger technology in the technology itself, but there's also a lot of noise. So just like we had in the turn of the millennium, we had this financial collapse called the dot-com bubble, where companies would put the .com behind their name, and all of a sudden their share price would go up, even if they had never generated any revenue. And similarly, there are lots of so-called crypto assets that have zero value. And when I show you my one of my wallets, you'll see that there's out of the 14, I think 3 of them have some value and the rest are worthless. So there's a lot of noise. Okay, so you have to be very selective. Bitcoin currently has captured the attention of the mainstream media. I find it interesting that in the polls, 48% have 28% have invested in altcoins, and more have invested in Ether than in Bitcoin, which probably tells me more about your age than anything else. So people that are relatively young are more familiar with this than more senior investors, and who are more cautious and haven't dipped into this market segment. Okay, so Bitcoin has captured the attention. If I was going to sum it up into 3 words, I'd say Bitcoin is passé. Ethereum or Ether is kind of where it's at today, and the altcoins or the new technology, some type of token or different tokens are going to be where it is going to be tomorrow. And if you're, a fan of Wayne Gretzky, then you really want to skate to where the puck is going to be, not to where it has already been. So now we're going to cover a number of alternative approaches to investing in distributed ledger technology. So first of all, you can buy it directly. You can buy it from what's called a cryptocurrency exchange. Okay, these are not regulated. So I'll give you some of my experience, some good, some bad. They're internet-based, so they're borderless. So anybody can buy from any exchange in the world, which is really kind of cool and appropriate for a topic for international. For the Bitcoin, the US dollars has been the most used currency to purchase it. The Japanese yen was the most used currency for Ethereum, but that's in fluctuation. And also cryptocurrencies are now frequently traded for other cryptocurrencies. And in terms of US dollars, about $1 trillion worth of US equivalent is traded in Bitcoin every day. But that only represents about 3% of the value of all cryptocurrencies is traded on a daily basis. So it's not a lot of it is still people holding on to cryptocurrencies as opposed to trading them. Kraken is an exchange in San Francisco. The headline here is BotCA. So this stands for Canadian Virtual Exchange. That was basically the first crypto exchange in Canada. It was run out of Ottawa. It was relatively small, and a number of years ago, the U.S. firm Kraken bought it. This is a screenshot from, I think, yesterday or the day before. This is the price of Ethereum, or Ether, which has jumped recently, the last couple of days. And here you can see what's called level 2 quotes, which in traditional markets, you have to pay for to get this type of information, but here, this exchange actually provides it to you. QuadrigaCX is a famous or infamous Canadian exchange. It was run out of Vancouver, and basically, full disclosure, I was a customer of Quadriga Exchange, and it was hit by fraud. The founder basically absconded with the funds, and the company that basically ran it is gone into receivership, and maybe I'll see a few pennies on the dollar as a result of this. But this is one of these things that you have to be be aware of. This is one of the risks that exchanges are currently unregulated. Once they become regulated, that would, significantly increase people's interest in investing in crypto assets. ICOs that stands for an initial coin offering. ITO, an initial token offering. The distinguishment between coin and token is kind of nebulous. Some people claim there is a difference, others that there isn't. But the interesting thing is that in the regulated market, an IPO, which is a well-known term, stands for an initial public offering. So the initial offering of a stock or a bond to the public, and it's highly regulated. So to sort of piggyback on that, people who wanted to issue coins and tokens came up with the term ICO or ITO. It rhymes with IPO, but it's unregulated. It gives it the semblance of being regulated when in reality it isn't. So, but they come out regularly, perhaps not as much as they did a few years ago, but you can find websites that will list up and coming initial coin offerings or initial token offerings. The other thing you can do is look for what are called airdrops, which are essentially free tokens or free coins. And the real question is, what are they worth? I've spent probably too much time looking at airdrops. I like free stuff. And ICOmarks.com is one place where you can find them. Another place is Telegram, which is a messaging app. There are other sources of leads as well. And there are other sites that actually rate the airdrops and tell you how valuable they may or may not be. Here's back to the Ethereum blockchain wallet, that one that you saw, I think the second or third slide, with that $10 in it. It looks like here, like now it went up a little bit to 1068, and you can see that the bulk of that is 2 GET protocol tokens, which are worth the bulk. I can't actually see this slide very well, but basically that's where the bulk of the $10 is. There's an XL token that's worth a few pennies, and the third one is worth a few pennies, and the rest are worth 0. Okay, so out of my 14 tokens on the Ethereum blockchain, basically one is worth something and the others are not. And I got all of these through airdrop. So as I said, I spent way too much time to earn that $10. So if you do want to buy cryptocurrencies directly on an exchange, and you want to, you want to buy it on a Canadian domiciled exchange, in other words, an exchange that's in Canada. So maybe you have some legal recourse should one of these misappropriate your assets. You may have some legal recourse in the Canadian courts or the Canadian legal system. They're not in any particular order. They are actually they're in alphabetical order. They're not endorsements, so you have to check each one of these out yourself. They are, some of them look actually kind of sketchy, the websites do, so I would steer away from them actually. I do deal with Wealthsimple Trade, but this is a public company, and you can only buy, for example, Bitcoin and Ethereum with this. They have a feature called Wealthsimple Trade. This is a Canadian company. It's on, I think, either Richmond Street or Peter Street in Toronto. I've been to their offices. They started out basically with apps for your phone to do investing, and you can trade regulated securities like stocks and bonds and ETFs on an exchange for no commission, but kind of like the Robinhood of Canada, if you're familiar with that organization. So you can basically trade the crypto assets. You can buy them, you can sell them. This is a quick list of the 3 sort of largest ones in the world. The biggest one is in Shanghai, China, and it's 10 times the size of Coinbase, which is recently, I think about 2 or 3 weeks ago, went public. You can actually buy shares in this regulated shares of this company. One of the things that you may want to be careful with is what an exchange requires for you to join. So KYC is know your client rules. They vary from exchange to exchange. Also, anti-money laundering rules vary. So exchanges that have these type of rules, basically they want your information like a photo ID, a passport, or something of that nature. It means that they're probably trying to be as legitimate as possible. Others, you send them money, they'll be very happy to take your money with no questions asked. So I'd be more cautious about those. Okay, something to worry about is, valuables have to be stored. Right now, if you have a bank account, it might be your bank account might be insured by the federal government. You trust your bank to store your deposits. But if you have cryptocurrencies, you're gonna have to store them as well. And you could leave them with an exchange, which would be considered an online wallet. It's convenient if you want to trade, but it's also subject to being hacked. And almost weekly, you hear about one exchange or another having some type of crypto asset being hacked. The other thing you can do is you can download it to a software wallet. In my next slide, I'll show you my software wallet. It's I use Jax because it's made in Canada, made in Toronto. It's not bad, but it's called a hot wallet because as long as you have it plugged in, as long as you have your computer plugged into the internet, it could still be hacked. So it's considered hot storage. And you may need different wallets depending on the crypto assets you want to store, because some wallets will only support certain. So Bitcoin and Ether, you could probably get wallets for that very easily. But some of the more esoteric crypto assets, it might be difficult to actually find a software wallet. And the third method of storing your valuables would be on a hardware wallet. And the 2 largest purveyors of these are Trezor and Ledger Nano. They now come with an X model. Basically, it's cold storage, which means it's like a USB that you plug into the side of your laptop. You move your crypto assets onto your hardware wallet, and then you disconnect your USB key from the internet, essentially. If you have it connected to your laptop, it's no better than a software wallet because it could still be hacked. It might be a little bit better, but to be truly safe, you have to disconnect it from the internet. So once you've moved your money your valuables onto your Trezor or Ledger Nano, and there's some other ones now as well, some newer ones, you have to disconnect it from your computer to be totally safe. And finally, the old-fashioned way of doing it is to basically print out a hard copy of your paper wallet. It's cold storage. It's going to be difficult to rob you, but it's paper. You could lose it. And people, believe it or not, people have lost access to their wallets, all of these types of wallets, and but it's probably not going to get hacked. but it's paper, so you may have to rewrite it every once in a while as your paper decays. Here's my hot wallet. This is Jack's Liberty, JAXX. I basically, in this wallet, I have one Ethereum Ether coin and a fraction of like a 1% of a Bitcoin. And when I took this picture, it was worth $5,000 Canadian. And you can also get this in US dollars. They support a number of other crypto assets as well. So that's an example of a hot wallet. Some more stuff about initial coin offerings or initial token offerings. Questions you want to ask yourself is, basically, some of this refers to any particular crypto asset, is what's the value proposition? Why would anybody buy this? And because it relies on decentralized ledger technology, one of the fundamental questions is, what does decentralization bring to the table that a centralized database couldn't do equally as well? There are, of course, computer scientists behind all the coding, and what you want to know as well is, are they good? Are they successful? Do they have a history of success? Can they execute on their plans? And what proportion of the crypto assets that they're offering are they keeping for themselves? Are they going to be essentially the whales of this crypto assets? So if that's the case, how much trust are you going to put in them? Also, as I show on my next slide, there are 9,500 cryptos in existence today. Okay, there are competitors. How are they doing? Are they doing better? Bitcoin has the unique, well, maybe not totally unique, but they have the characteristic that there will only ever be 21 million of them. The Dogecoin, it has 139 million of them, but if they run short, they can create more. So in other words, just like a central bank can create more fiat currency, some of these tokens also have the ability to inflate in value, or inflate and produce more tokens and deflate the value, their purchasing power to you. And then there's this last sort of question that you don't really care about any of this, as long as you can find a greater fool to sell it to at some later date. So, as long as you can find that, you don't want to be the last person to buy it, because then you are the greatest fool if they're totally worthless. So as I said before, there are 9,500 in existence. You're going to spend a lot of time trying to sift through them. Most of them are worthless. And by that, I really do mean most. As I said before, utility tokens, they let you provide a good or service. They perform some type of utility or function. And the question is, can they execute on that? Security tokens represent ownership, and these are the focal point of security regulators. So these are becoming less popular because of that. Okay, other ways to invest. Exchange traded funds. Okay, exchange traded funds is basically a pool of investments. The advantages are you don't need a wallet of any sort. The crypto assets are held in cold storage. In other words, they're held offline, and they're simple to trade. You just buy them on the Toronto Stock Exchange, which is a regulated stock exchange, so there are rules. And you can buy and sell them every day that the markets are open, from 9:30 a.m. to 4 p.m. Local Toronto time. And if you are Canadian or Canadian resident, then you can also buy them for your tax-free savings account or your registered retirement savings plan, which you are not able to do if you are buying your crypto assets on from an exchange. Okay, so there's some tax advantages. The world's first Bitcoin ETFs were started in Canada. The world's first one was in February of this year. Its ticker symbol is BTCC. You buy that and sell that on the Toronto Stock Exchange. Actually, all of these are on the Toronto Stock Exchange. And this one, on the first day of trading, it received, I think, $160 million Canadian, and it's now worth. Now people have invested over $1 billion in that particular exchange traded fund. The second one to come on the scene the next day was produced by Evolve Funds. There was a great advantage to being first mover. This one has not attracted quite as much. CI Global Asset Management came about a month later. They have a large clientele in the mutual fund field, so this one might pick up in terms of the amount of people investing in it. And then just lately, 3IQ CoinShares just listed an ETF. So there's 4 of them available right now. For the last 8 years, people have tried to get exchange traded funds approved in the US, but so far this hasn't happened. So, and by the way, you can buy these particular funds with a slightly different ticker symbol in US dollars if you so wish. So if you have US dollars, you can also buy these on the Toronto Exchange in US dollars. Ethereum, this just came on the market a few weeks ago. ETFs for those, same 4 players are providing those. 3 of them came on at the same day, and 3IQ CoinShares provided this ETF 3 days later. Okay, so these have just been available for a few days. So they don't have a lot of history. As I said, the advantages are that you can buy and sell them daily, and you can buy them for tax, not tax avoidance, but tax deferral or on a tax-free basis as well. You can also buy traditional stocks or futures contracts. So I've listed a couple of Canadian stocks here. Some of them are mining stocks. They mine Bitcoin. This one is BIGG on the Canadian Securities Exchange, runs the netcoins.ca exchange. So you can actually own an exchange as well. Interbit is a company, I think it's based in London, England. They're involved with energy trading on the distributed ledger. Victory Square just basically does venture capital investments. There are similarly US dollar denominated stocks. And this one is kind of interesting because even though you cannot buy ETFs in the US, because of the different regulatory environment for futures, you can buy futures contracts on, for example, Bitcoin and Ethereum on the Chicago Mercantile Exchange. As I mentioned before, fungibility, interesting concept. You know, if you have a Bitcoin, if you have 2 Bitcoins and you split them and you sell 1 Bitcoin, the other Bitcoin that's left still has the same value. There's, you know, these are fungible. You can exchange them, you can split them. In fact, one of the benefits of Bitcoin and Ethereum is that it's called fractionalization. You can basically go to, I think, like 8 or more decimal places of a Bitcoin, which you basically can't do with a dollar. You can go to a 1/100th of a dollar or a cent. That's the limit. But there are no limits to fractionalizing. Non-fungible, okay, art, okay, there's only one Mona Lisa. Each individual house has unique characteristics. One of the first non-fungible tokens was CryptoKitties. Okay, and I have a slide a little bit later about CryptoKitties. CryptoKitties are unique, non-fungible digital assets. Once you create a CryptoKitty on, I forget the name of the blockchain, then that's it. It exists there, and you can buy it and sell it, but you cannot create a duplicate. So here's some websites for non-fungible tokens or platforms. So some of these, most of these are places where you can buy and sell them. Okay. Now, just as a caveat again, my question for something like a non-fungible token is, what do I know about being a collector? I know nothing about art, so I'd make a very poor art collector, and I know nothing about CryptoKitties, so I may not be a wise investor in non-fungible tokens. Okay, but if you know art, or if you know, I don't know, where the marketplace is going in digital art, then these are some things you might want to consider. So these are some of their websites. I'll leave it at that. Here's something interesting. Elon Musk of Tesla and SpaceX fame. he tweeted in March that he was selling a song about non-fungible tokens as a non-fungible token, and he later changed his mind and decided to keep it. So this is in the news a few days ago. Zoe Roth, a girl I believe from North Carolina, or when she was a young girl, 4 years old, she witnessed a controlled burn that the fire department was putting on. They were, I guess, practicing their skills at controlling a fire. And she was 4 years old at the time, and she showed up with her family. Lots of people in the neighborhood showed up with their family to watch this controlled burn. And her dad asked her to turn around and, take a picture of her. And what he did was he caught her looking kind of mischievous. So this was a disaster. It's a house burning. If people don't know that it was a controlled burn, it looks like this little mischievous little girl is an arsonist. So this was put in. It became a meme, an internet meme. There were pictures of the Titanic sinking with her face beside it, and this particular photograph was sold as a non-fungible token. So in other words, it was digitized, put on the distributed ledger as a non-fungible token, and it's sold for 180 Ether, which at the approximately current price is $750,000. So Zoe is going to be using this to pay off her student debt because she's in university now, I believe, and she's going to give away some to charity. And one of the aspects of non-fungible tokens is that the artist, whether it's music or photography or some other type of art, there's a greater propensity for some of the the value of the artwork to go back to the creator, which doesn't typically happen in today's current regulated markets. Here are some more blockchain platforms on which you can buy and sell non-fungible tokens. Flow is it's called onflow.org. This website is run by Dapper Labs, which is the founder of CryptoKitties, which is founded in Vancouver by I guess some computer geeks who like to design little kittens. So they sold, I believe, I think I have a slide coming up, so I won't spoiler alert. So the question is, are non-fungible tokens the new initial coin offerings? And if you compare search terms for ICO, they peaked about December 2017, and now if you look at the red one here at the end, you can see that non-fungible tokens are basically peaking just like ICOs did. As I mentioned, though, you want to be very careful. You want to know something about being a collector, because how many CryptoKitties does the world want, for example? So one possibility is you might want to create your own cryptocurrency, and you can raise millions or billions of US dollars if you wanted to. The Ethereum blockchain is open source, so everybody knows what's available. If you want to do a non-fungible token, you'll have to use a newer standard. I think it's the 721 for non-fungible tokens, but there's a couple of different standards of the Ethereum blockchain now. And this is the information about CryptoKitties. They had $12 million in revenue breeding these cats in the first month that they started. And there are some crazy prices going out for these CryptoKitties. And the way the company or the founders make money is that every time there's a new CryptoKitty bought or sold, they collect 3 3/4%. So this is how they earn their keep. And this is a quote from the Wall Street Journal from a few years ago. They say that even when a cryptocurrency calls itself useless, you can think of the Dodgy coin, it was created as a joke. It says the money floods in, and it has. I think Dodgy coin is now either the 4th or 5th most highly valued cryptocurrency. There's even websites. This is from 3 years ago, using the ERC20 standard and MetaMask and Remix. There's a things that you can attach to your Chrome browser, you can create a cryptocurrency in less than 10 minutes. And finally, my last slide here, there are lots of interesting stories about in this space. If I don't know how many people have heard of Bitcoin Pizza Day. It's coming up, the 11th anniversary. You can Google this. The person, I believe it was in Florida, ordered 2 pizzas for 10,000 Bitcoin. So 10,000 Bitcoin today are probably worth about 500 million US dollars. So $500 million for 2 pizzas in 11 years later. You don't know what's going to happen to the value of these cryptocurrencies. There's lots of stories that these happen almost weekly, unfortunately, or at least monthly, of exchanges being hacked, and one type of crypto asset being absconded with, and it's typically there's some weakness in the coding. There's fraud that takes place. I'll give you an example of QuadrigaCX. There's lots of jokes. I read this morning that one of the reasons Dogecoin might be popular is because people always love a good joke, and that this is an example of a joke that's taking off. There's hucksterism. There's some of the stuff is unbelievable. You see people doing YouTube videos claiming that some crypto asset is going to go to the moon. There's lots of that. Teslas can be bought for Bitcoin now, and I have a picture here. This is a picture of people burning Banksy, who's an artist, famous artist. They burned one of his pieces of art and made it into a non-fungible token. This event, they did it in, I believe, in Central Park in New York City. They bought the art for, I think, $100,000 approximately, and they sold the non-fungible token for about three or four times that amount. So that concludes my presentation. I hope I didn't go over time. Jordan?
Awesome. Well, thank you so much. We have gone slightly past 10, but that's totally okay. It looks like we still have a strong audience here. So for those of you who might have wanted to stick on just till the end of his lecture, I want to thank you for joining us. I want to remind you to follow us and stay connected on Facebook and Instagram. You can find us at Lakehead International. Our YouTube channel is just Lakehead University. I also want to encourage our audience, if you haven't quite yet taken this chance to do a virtual campus tour, head over to lakeheadu.ca/tours and explore Thunder Bay and Aurelia and get familiar with our campuses. On that note, though, we will still have a question period, if that's okay with you, Herman. We'll take about 10 minutes or so to do that. I have plenty of questions in the Q&A that are marked that we would answer them. So I'll sort of do a fire round, I like to say, where I just pass them over to you and you can answer as quickly as you can, essentially. So okay. The first question, does the rate of crypto assets often change as exchange rates?
Does it change as often? I would say yes. It changes 24/7, 365. It changes all the time. So what a Bitcoin might be worth in terms of US dollars or in terms of Ether changes continuously. Unlike, well, currency trading is practically 24/7 as well, although there are lulls during any 24-hour period. The other aspect is that cryptocurrencies, the exchange rates on cryptocurrencies are much more volatile than, say, between the Canadian dollar and the US dollar, which is much less volatile. I just want to interrupt Jordan for a second. If I don't get an opportunity to answer your question, you can find me on the Lakehead website, and you can always email me, and I'd be happy to answer any questions that we don't have time to get through today.
Awesome, thank you for that. Another question we have is actually more about a statement and your opinion. So Dogecoin rallied more than 900% in 4 weeks. It is currently trading at 70 cents. Do you think it would increase to nearly $1 in the future, or is it a bubble in the making? Okay,
one of the things that you learn as an academic is to be humble, at least intellectually humble. And as I said in one of my slides, no one is able to predict whether any particular cryptocurrency is going to go up or down, unless maybe they are a whale and they are actually moving it. They are manipulating the market. So my opinion, I don't have an opinion on Dogecoin. Personally, I don't have any, and I have no intention of getting any. So you can read into that what you want.
Fair enough. Another question we have is, what are the differences and similarities between gold and crypto as an asset?
Yes, there's been some business media that have talked about that. I don't see any similarity. I suppose the fact that Bitcoin is limited to 21 million coins in total ever means that it's anti-inflationary. So I saw a quote at one point that they said, what happens when the 7.6 billion people in the world realize there's only ever going to be 21 million Bitcoins? That suggests that the value would go up because there's a limited amount. And to the extent that fiat currencies like the US dollar or the Canadian dollar, more and more of them are created, yeah, the value of Bitcoin might creep up. But that's where the similarity sort of with gold ends. There's a limited quantity of gold, but gold actually is mined. And if you look at history, when Spain, came to the New World, came to South America, and they took a lot of gold and silver back to Europe, Spain had tremendous inflation. So arguably from an anti-inflation perspective, Bitcoin might actually be better than gold.
Very interesting. Another question related to sort of the future of Bitcoin and cryptocurrencies. Do you think it's possible that in the future cryptocurrencies will be the sole form of currency and no more cash would essentially exist?
No, I don't think so. I think if you study technologies, you'll find that as they evolve, old technologies still sort of stick around. If we drive automobiles. Before that, we had horses and buggies. There are still places where there are horses and buggies, and people still have horses. So you will, people still make furniture by hand. Technologies don't disappear. They may become less prominent and get displaced on a larger scale. But no, I don't think you'll find any technology that'll actually disappear over time completely.
Fair enough, fair enough. Another question we have is, cryptocurrencies being held on a virtual platform are exposed to the threats of internet and online transactions. What is your opinion on that?
There are lots of risks. Even in a regulated market, there are risks. There have been times when I have wanted to trade a stock on my browser, and for some reason or other, the bank's website is down, or a portion of it is down, or I don't have internet access. So there's a whole chain of things that have to work correctly for you to execute. And yes, if your Wi-Fi gets hacked, or if your smartphone is being jacked, then yeah, there are all types of risks, in addition to the more common ones like the exchange being hacked.
For sure. Another question we have is from Erica. It says, if the cryptocurrencies evolve and become the common currency, what would happen to physical money and other forms of exchangeable money used in banks nowadays? So of course, you've answered that in the sense of your comparison to the horse and buggy, as well as now automobiles, and how technologies typically don't replace, although they might vastly displace them in a sense. In the sense of banks and how they operate using money, what is your opinion on that?
Yeah, so full disclosure, I do own Canadian bank stocks, and I am not worried at this point that the banking system is going to be displaced, but 5-10 years from now, they could be significantly weakened. And yes, especially if the central bank determines that they're going to create central bank digital currencies, then a lot of value, I believe, will move from bank deposits into the central bank digital currencies. And there's lots of questions around that. Is a central bank then going to be taking the role that commercial banks currently occupy? And what does that mean for government? Right now the central banks are the lender of last resort, but then they would basically become the lender, the only one. So lots of questions still, no answers yet.
For sure, yeah, lots of implications with that move too. I think that you're mentioning, that's a great segue into the next question, sort of about the potential, whether in 5 to 10 years there could be not necessarily a collapse within banking systems, but this one actually ties into what happens when a blockchain or any cryptocurrency collapses.
Essentially, their value goes to zero. I don't know about what you would call collapsing, because I'm trying to picture this now, what's meant by a collapse. If you follow the price of Bitcoin, it started at zero and it's spiked at something like 60 to 65,000 US dollars earlier this year, and it's been very volatile. Theoretically, its value could go to zero. But the code, it's out there, it's on computers. It's probably not going to disappear. You can see by my airdrops, there's lots of them that I received that are not worth anything. The code is probably still out there somewhere. One interesting thing is, Bitcoin came out of nowhere, and Ethereum blockchain followed, and now there are 9,500 different tokens. In all likelihood, there's a better one than Bitcoin out there, and someday it will probably displace Bitcoin. That doesn't mean this Bitcoin will disappear, but there will be, when you think of what Bitcoin is capable of doing, it's fairly limited, and there's probably going to be something that's going to be less limited, that has more functionality, that's going to displace it.
Fair enough. So the final question that we have for today, that we have time for, I know we won't be able to answer everyone's question quite yet, is, do you pay taxes on cryptocurrency?
That's a very good question. I just finished my income taxes, and I used a little software package, and for the first time ever, the question popped up: did you buy or sell cryptocurrency? And depending on where you live, you may, in Canada, you have to include capital gains at 50% of your tax rate. So if I bought cryptocurrency at a low price and sold it at a higher price, then technically I would have to pay taxes on half of that gain. And yes, in Canada, you do have to pay capital gains tax on any asset, essentially, that you buy low and sell high. Now, the other side is, if you lose money, you can write off any capital losses against your capital gains. So if you lose on some currencies and gain on other ones, you get to balance them out. But you can't, if you lose on your cryptocurrencies, you can't reduce your taxes on any other income. So if you have a job and you pay a certain tax rate on your earned income, you cannot reduce that by your losses on your crypto investments.
Well, good to know, good to know. I couldn't have said it better than one of our audience members in the chat said. This webinar has been very informative, and thank you so much for your time, Dr. Vandenberg. It's been a pleasure being the moderator and host and learning more about crypto assets. Of course, I was really excited to launch the International Lecture Showcase series and kicking it off with such an interesting and wildly popular topic in today's world. I think that we have a solid session here. So I'll remind our audience once again, you have our social channels there on your screen now if you want to take a screenshot or even take a photo of your laptop or whatever that might look like. Give us a follow. I'll remind you to the beginning of today's session where I talked about our upcoming events. We have more lecture showcases. We have other Lakehead Explored events. And we also have those exclusive applicant and family receptions. So please head over to lakehead.ca/international-live, and you can register for any one of those sessions now.
Thank you for checking out today's video. If you have any questions, you can always comment below. Stay connected and follow us on our social media channels to stay informed about upcoming webinars and get an insider sneak peek of Lakehead University. See you next time.